Hello and welcome. You have tuned into Closing Trades on ET Now. I'm Shrishti Sharma and you are catching us live right here from Motilal Oswal Studios. Indeed, on the market front, it's been a Black Friday coming in for the markets because Nifty 50 is seen to be retesting the fresh lows on a YTD basis of 2025, but not sure whether or not you can call this Black Friday to be a sale or not, because nothing has been holding up really, because relentless selling pressure from the FII side, the earnings trajectory is not looking that great, and definitely day by day we are getting to hear some fresh concerns over the tariff announcement as well. So a lot of these factors have already played into the markets, but still believe that after so many big events being passed out, markets are definitely not taking cues and they're not looking optimistic even from these levels. But on the intraday basis, what we are marking right now is a decent recovery from the day's lowest point. We have to find something out of all the negatives that we are seeing. So let's look out for that only, because at one point in time, Nifty 50 was down more than 200 points. But for now, you're seeing 150 points of cut. Even for the bank Nifty basis, it's been a decent recovery from the day's lowest point. But can't call it the same for the broader markets as well, because if you see the advance and the decline ratio, the number of stocks declining are way above and way ahead of the number of stocks that are seen to be advancing. Just almost 200 stocks that are still holding to that shade of green right now. So definitely not a great day coming in for the markets. Let's see what last 1 hour of this particular trading week bodes in for the markets right now. But we have a lot of experts for the next 1 hour who will be joining us and trying to help us what strategy you should adopt in this particular market. We are being joined by Shivani Sarkar, who is joining us from Kotak, as well as we do have Naresh. And good afternoon to both of you. Naresh, let me come to you first to know the levels that we should watch out for. Nifty 50, 22,800, once again retested. What does it mean for Nifty 50?
And we are not seeing selling pressure on the large caps beyond that point. But if you look at the small cap and the mid cap indices, we have broken those levels and we are almost equivalent to a level of 21,900 to 21,500 on the small cap and mid cap indices. So we are getting oversold over there. But till the time we don't get a sharp recovery, we do not call it a bottom as such. On the Nifty below 22,700, 800, the next price point comes closer to that 22,000 to 22,230 mark, which is where we roughly closed on the day of closer to 22,000 mark, where we closed on the election day lows. So overall, would not expect that to break. So we are getting into a phase wherein this could get oversold and find a bottom somewhere in this band. So overall, small caps and mid caps have taken a larger hit. Index is still holding on, and we've not seen the breadth being terrible in the large cap indices.
Right, should hold on to these levels entering that oversold territory. But Shivani, do you also concur with that view? Because everybody has been waiting for that bounce to happen, not happening yet, and definitely can't say this for the broader end of the market. What is that is making still the markets nervous, Shivani, and what's your reading so far?
Yeah, hi, good afternoon. So when you look at the volatility that we have been experiencing since the beginning of this year, it's been a mix of both global as well as domestic factors. Money has clearly moved out of emerging markets, moved towards US. And today, when you look at the ratio, for instance, of MSCI EM to the S&P 500 index, that is at its lowest since March 2009. And that gives you a sense of how money has moved away from emerging markets, including India, which is clearly impacting our markets as well. On the domestic front, I think the biggest takeaway is on the earnings side, where earnings fatigue has set in and earnings over the last few quarters have been muted, and similar trends seen in this quarter as well. Now, in this sort of a market, our belief has been for a while that risk reward continues to favor large caps, and that's a view that we continue to hold. Today, large caps are trading on a 1-year forward price to earnings multiple close to its long-term average. Mid and small caps have seen correction, and clearly valuations have also corrected from its highs. But even today, when you look at it from the perspective of its own long-term average, both mid and small cap indices, their premium still exists. And therefore, our belief is that the risk reward continues to be favoring large caps over mid and small caps at this point in time. Now, within the mid and small cap bucket, there have been stocks that have corrected considerably, far more than what the index is pointing out to. And therefore, there one has to be cautious and look at stocks more bottom up in terms of picking stocks in this sort of a market. But clearly, the bias at this point in time from our portfolios continues to be large cap focused over mid and small caps.
Right. So stick with the quality large cap names at this point in time. That's the advice coming in from Shivani. But Shivani, sectorally, how do you see the picture panning out? Because in this recent sell-off, what we see is that financials haven't participated much. Other than that, it's been quite a mixed set when it comes to the auto pack. The pharma stocks, barring a couple of them, they are also holding on, and nothing much negative, or rather nothing much positive to actually read within the pharma space. And even when it comes to the FMCG basket, a similar sort of commentary. But what's standing out for you, Shibani, sectorally, and where should actually one can look at to go ahead and make some more investments in the large cap space?
Yes, so absolutely. So you are right to point out that, the banking sector, especially some of the large banks, which have underperformed in the last year, have been holding up better. This is a combination of a few factors. One, from a valuation perspective, they are trading at price to book multiples, which are lower than their long-term averages. ROEs for these banks, in fact, over the last 5-year period have expanded, and these banks don't require capital, which is why we believe that in this sort of a market, the banking space, specifically some of the large private banks and maybe a select few public sector banks which are large, are possibly well placed. Apart from banks, the other sectors where we think the overall earnings growth trajectory is likely to be maintained is one, the entire healthcare basket, and within that specifically the hospital space, where even in this last quarter, we've seen earnings trajectory remaining fairly healthy. And our expectation is that going forward as well, both on the domestic side of the pharma space, which is the domestic formulations business, as well as healthcare and hospitals, trends should remain fairly healthy. And therefore, that is another segment that we like in the overall basket. The third is the technology space. Here again, our belief is that incrementally discretionary spend should pick up, and that should provide some runway for top line growth going into next year. And with currency depreciation, some of the margin headwinds could be negated, and therefore margins should remain largely stable. And hence, in FY26, earnings trajectory should be better for IT, especially in context of what's happened over the last few years. And finally, in the consumption basket, we are looking at a few discretionary names that will benefit, especially those focused on the rural segments or even in the middle class segment, where post the budget, there could be some positive benefits coming through. So clearly, these are some of the sectors where we believe that, in terms of portfolio allocation, where we are positive at this point in time.
So that's the view coming in from Shibani. But if you are watching the news very carefully, because you have these harried customers gathering around the New India Cooperative Bank in Mumbai, that is a day after RBI actually barred the lender from issuing new loans and suspended deposit withdrawals for 6 months. This citing the supervisory concerns in the lender's liquidity position. The RBI has also written to the police for security for all bank branches. Anjali is here with more details. And Anjali, I believe you're in a location which is very closer to where I actually reside. But given the fact that I know this is another jolt out of the blue coming in for a lot of customers who are really waiting for their money and hard-earned money.
Outside the Goregaon West branch of New India Cooperative Bank, where people have been queuing up since the morning. Since after RBI restrictions on withdrawal of deposits, people have started to queue up to access their lockers, as locker operations will remain in operation. And we have some people here who have their society account with the bank. So sir, can you tell us how exactly worried are you about the money that you've deposited?
We are from Udayraj Cooperative Housing Society, and our all society sinking fund and repair fund are being kept over here. That amount was nearly about 22 to 25 lakhs. And government is also giving exemption to the society in income tax only if you have got a deposits in the cooperative society bank. So that was the only reason why we have been keeping this all deposits with the cooperative banks. And now all society money has been stuck up. And we have already started our repairing work. And now I am worried how will I pay to the repairing contractor all the money which has been stuck over here.
So when you inquired with the bank employees, what did they say? When will you be able to access that money?
Once this sort of a problem comes up, You call up the bank employees, what they say. It's a safe bank. You don't worry about your money. Your money will be paid to you. But what is the guarantee? Did they give us? Did they give any of the complaints or any of the return? This thing should be given by the bank or the manager of the bank to all. Like every of the customers who are holding an account, they have started receiving the SM message in the morning that RBI barred New India Cooperative Bank from doing some business. But what is the guarantee? Who's going to give us in writing that the money is safe in this bank? Today, this sort of scam is happening. Every of the individual investors will start losing the interest in the all the cooperative banks or for the small time private PSU banks also.
Correct. And now these are not the only people. The banks have as much as 2,436 crores of deposit as of March 2024. And many customers are now worried when they will be able to access that money. This is Anjali Palod for ET Now.
Anjali, and like you said, a lot of people would be worried about this particular thing, but I hope we will get you all the details and all the updates on that particular front. But on that note, we slip into a break on this edition of Closing Trades. When we come back, we talk about markets and more. Don't go anywhere. Welcome back. You're watching Closing Trades right here on ET Now, and there is a very steady recovery when you talk about the benchmark indices. And we are joining actually live from Motilal Oswal studio as well. And as you can see, you are seeing a steady recovery in the markets. It's trying to actually recover from the day's lowest point, and pretty smartly at that. But let's talk about one particular counter that has been in focus, and that is Religare Enterprises, because the saga still hangs in a limbo as the SEBI has rejected Danny Gaikwad's open offer for the second time, citing a failure to deposit about 600 crore rupees in the escrow. Anurag Joshi is here with all the details. Anurag, fill us in with this particular detail, because given the fact that every day you get something new to hear about this one.
Securities and Exchange Board of India has rejected a competing open offer proposal of Digvijay Gaikwad. Gaikwad is a Florida-based investor who had made an offer to SEBI that he is willing to, and he's ready to make a competing open offer to the shareholders of Religare Enterprises, and this was 26% of the shares of Religare, and this would have competed against the Burman family open offer, which closed yesterday. Now, the Burman are the biggest shareholders in Religare, and they own 25.1% equity stake in the company, and their plan is to raise their equity stake beyond 50%. So they made an open offer for 26%. Now, SEBI has given reasons why it has rejected Gaikwad's open offer proposal, and the key is that by today, Gaikwad was supposed to deposit 600 crore rupees into an escrow account. That was a Supreme Court order on Gaikwad when he had approached the top court to seek an exemption from the SEBI rules. And so the Gaikwad has failed to deposit the money. And also, interestingly, the merchant banker PL Capital Markets, which represented Gaikwad, now SEBI says that they appeared clueless about the credentials of Gaikwad, and they had failed to, and the banker had failed to do a proper due diligence on the KYC of Gaikwad before accepting the mandate, and the grant of exemption sought by Gaikwad would not be in the interest of the shareholders, and it just said that it's frivolous for the open offer of Gaikwad to go ahead.
Getting us the latest on this particular story. It's been a developing story, and Anurag is just on the top to get you the latest details on this one. But let's move back to the markets then. It's been a decent recovery from the day's lowest point, at least we can call that, because for now, Nifty 50 has once again rescaled to that 22,900 mark, and some of these heavy weights like Reliance, HDFC, if we can pull those intraday charts, we'll see that these heavy weights are definitely trying to lend some bit of a support to the index. But let's also welcome CA Rudramurthy on board. And hi, Rudramurthy. Good afternoon, and thank you so much for your time. First up, help us with some of the stocks that are standing out for you in this sort of a market, because it's a sea of red across. But any stock that you are liking at this point in time, and especially the kind of recovery that we are seeing?
Good afternoon, and thanks for having me in the show. See, first of all, after seeing this kind of a massive fall And yesterday's Trump reciprocal tariff has been overreacted by market today. And I don't advocate definitely shorting at current levels. So no selling here. And on Nifty, you have a very, very crucial support at 22,700, 730 level. And we are very close to that very strong support. Similarly, if you see even today's intraday low on Nifty future as well as Bank Nifty future recovered from those lower levels of around 22,850 where the strong support lies. So this bounce back, whatever we are seeing, if you want to play on the short side, wait for further more recovery and then sell. Definitely this is not the place and time to sell market, but rather try to buy stocks which are relatively stronger, stocks which have given good results but it has not performed well on the price, or similarly stocks relatively like even in today's weak market which has done very well. One example similar to that which I have picked up today is Bharti Airtel and ICICI Bank. Look at Bharti Airtel, even in a weak market for last 1 to 2 weeks, stock has very, very strong supports at around 1,650, 1,680, and relatively it is a very, very strong chart. So I will be a buyer in Bharti Airtel. Stay with large cap for some more time till we see market momentum and buying on the upside. Avoid mid and small cap. Buy Bharti Airtel, look at targets of 1,775 and have a stop loss of 1,680. And similarly, even in today's weak market, one of the private banks doing very, very well is ICICI Bank. Charts are very, very strong. Look at targets of 1,280 to come on ICICI Bank and have a stop loss of 1,245 for this long trade. So a buy on Bharti Airtel and ICICI Bank, which are very, very strong in a relatively weak market.
All right, so that's the take coming in from Rudra, but let's take a look at what exactly the markets are doing. Yes, a very strong recovery at play right now for the benchmark indices. And it's very interesting to note, given the fact that the IT index is now actually turned into the positive territory. At one point in time, you had the FMCG index that was ruling the charts, but is the IT index trying to slowly creep into that sort of a territory? And Shibani, I'm not sure that if you discussed about this particular sector earlier on, but IT sector, this one is touted to be one of the biggest beneficiary of what could be happening globally. What's your take on this? And do you also concur with that view? And given if that is the view, then should you actually bet on this space?
Absolutely. So technology has been a sector where we have been positive on for a while. Our thoughts are twofold. One, near term, when you look at the US markets and the North American markets, which are a large contributor to revenue for Indian IT services, there is a clear trend of improvement where growth is concerned. And that should flow through in terms of some of the discretionary tech spends coming back on track, especially for large verticals such as BFSI, where again, companies have been reporting fairly steady numbers where the US banks are concerned, especially the large banks. So that's one factor. Second, a more structural theme that we are looking at within the technology space is clearly the adoption of artificial intelligence and Gen AI. What we have seen in the past, and if you look at whenever technology changes have happened, Indian IT services players have benefited. And our thought is that while AI will lead to productivity improvements and there will be disruption, but overall, as AI adoption improves and increases, Indian IT services players are fairly well placed, and that provides a structural runway to growth. So therefore, if you look at the entire pack, our belief is that one, top line growth should improve going into next year, which is FY26, and therefore earnings trajectory should also start to improve. Now, this is a sector where clearly from a balance sheet perspective, balance sheet trends are very healthy. This is a cash generating sector with companies returning back cash to the shareholders. Large cap IT names are still trading at multiples where in pockets you do find valuations which are reasonable. And therefore, there is scope to look at this sector from an overall perspective.
Right, so that's the take on the IT space. But Shibani, with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us this afternoon.
Thank you.
Well, with this, let's move on, and just almost half an hour left for the markets to shut shop and before we end this week. But let's start taking some of the closing trade ideas from both of our experts. And Naresh, you go first. Tell us, what are you looking at right now?
So continue to be defensive given the volatility. So that would be a buy on ITC, which has corrected from 460 to 410 in the last few sessions. Could see somewhat of a bounce back from here towards the 425, 430 mark.
All right, that's a defensive bet on ITC, looking for a buy on these levels. But Rudra, what about you? What's on your buying list?
See, for me, SBI Life is also another stock which is relatively very, very strong. And at current price of around 1,460, SBI Life offers a great buy for me. Keep a tight stop loss of around 10 rupees below the current market price, which is at around 1,450. And then look at targets of around 1,500 to come on SBI Life. So a buy on SBI Life, a relatively very, very strong stock.
All right, so those are the trades coming in from our experts. But moving on, before we hit the break, let's talk about the AGR dues miscalculation. Remember, the Supreme Court has junked the pleas of Bharti Airtel as well as Vodafone Idea on back of that particular development. What they have said that the SC has ordered the telecom companies to pay about 1.47 lakh crore rupees dues. That includes about 92,000 odd crores in license fee, 55,000 and 54 crore rupees in spectrum usage included that in that sort of a calculation. Remember that these companies had pleaded to the Supreme Court, and today the Supreme Court has gone ahead and junked the plea. So on back of that, keep an eye on Vodafone Idea as well as Bharti Airtel, while both of them actually reacted to this particular news piece. But on that note, we'll slip into a break on this edition of Closing Trades.
Welcome back to Right Here on Closing Trades. You're watching this live from Motilal Oswal Studios, and with this, let's also welcome Anand Tandon, who is joining us on the show right now. Hi Anand, good to be speaking with you. Everybody is just looking out for that answer, Anand, that when is this selling going to stop? At this point in time, some are also flagging off that it is a good time and it's a sale that is going on, the benchmark indices and the markets as well, where you can actually go ahead and increase your exposure. And some are even flagging off that please don't have much return expectations from this particular year. What's your view and which side of the fence you are in?
Well, the two of them seem to be contradictory advice, isn't it? If you don't have expectations, there is no reason to be hurrying to buy. At the end of the day, the market will start moving up only when there is adequate return for the risk that you are going to be making by investing in equities. Otherwise, you're better off putting money into fixed income. The fixed income rates even now continue to be fairly attractive. So in my view, there is a little bit more to go. It's difficult to take a call as to when to start buying, but if you were to look at what you would like to buy, most of the companies continue to trade at humongous valuations. More than half the Nifty continues to trade at more than 50p. The ones that don't are actually trading at fairly high P, given the fact that they are commodity companies. So largely, I think there is still a reasonable amount of downside that still prevails, especially in the small and mid cap space, maybe less so in the large cap. I would think that, if you really want to start buying, you would want to be a little picky about when any particular company has reached a level which you feel comfortable with.
Right, Mr. Tandon, good afternoon. Cheryl also joining in the conversation. And I wanted to get your views on what exactly transpired in the entire historic meet between the Indian Prime Minister as well as Donald Trump. Though we were pretty enthused with the commentary coming in from both of them at the helm of the state, but I just wanted to get your views. What sort of takeaway should one go home with when you talk about the talks between both of the head of the states?
Well, for most part, it was the posturing which was important. That given the fact that there is a new president back in the U.S., you want to make sure that the Indian Prime Minister and the U.S. President reiterate the fact that the countries are coming closer, etc. I think those are largely irrelevant from a market perspective. What matters is, however, what will happen in terms of tariffs. There are not too many overlaps that I can see where India exports and has the potential to import from the US. They are largely different sets of items which are imported and different sets of items which are exported. So when they say reciprocal tariff, I don't exactly understand what that means. I mean, there are rare cases where you are unable to buy we could be exporting motorcycles or cars to the US, whereas they are not able to export that to India. But the numbers are going to be rather minuscule. For the most part, we buy defense equipment from the US, for example, and we export, let's say, IT services. I don't think there is much overlap between the two, and therefore, reciprocal tariffs is something that we'll have to see how it actually gets implemented. The rest of the thing really doesn't matter. I mean, all said and done, I think India's growth is not being affected by anything that's happening necessarily in terms of overseas market. It's mostly done. The problems lie within the country. There is a certain lack of purchasing power, and the markets are fairly narrow in terms of where the money is, and therefore we have to find ways to stimulate that growth. It would certainly help if the global market was expanding faster than it is right now. But given the fact that even now the net trade in India is still a smaller part of the overall economic growth, what matters internally is a lot more important for the stock market.
Right, but let's have a look at the pharma index as well, because what we are seeing is that Nifty Pharma is also one of the sectors that is under tremendous pressure today, because all in all these large cap pharma names are not doing well. It was the US president talking about some of the tariffs being implemented on the pharma names as well. Nothing specifically coming in on India front, but if we look at the index, is almost down 3%. It's retesting its January lows levels as well, and most importantly, these levels were actually seen back in July 2024. Naresh, what's been your reading on the Nifty Pharma, because the structure is not looking that great, and even some of these high beta names in the pharma space, take a look at Laurus Lab, Grand News, they are down anywhere between 7 to 8%.
Coming out of US as such on the index. But overall, it's a very similar chart to a downtrend for a lot of other indices. So we wait and watch for that 20,500 mark on the pharma index, and then see how it turns. Let it consolidate for a day or two. Does not look like a breakdown per se, which could happen in a major way, but would take some time, volatility here. A lot of stocks like Laurus Labs could actually be interesting, given that it's corrected back to the 500, 550 band, which it actually broke out of. So there could be selective opportunities with a medium to long-term outlook in the pharma space.
Rudra, let me come to you and ask you the multi-million-dollar question that everyone's asking. When will the mid-caps actually stop falling? Given the fact that everyone's trying to hope that, yes, this will settle down sometime soon, maybe we should go ahead and put our bets into mid-caps, given the fact that the returns for the broader markets have been way sharper than what it's been for the large caps.
See, with my 2 decades of experience, one thing is very clear. If market starts recovering, money will first flow towards large cap and then towards mid and small cap. So unless you are a very long-term investor and you understand companies well, fundamentally you understand their business, and more than all this, if you agree with the quality of promoters and the business as such, then yes, these are mouth-watering levels where you can buy. And if you are ready to see another 5, 10, 20% kind of a correction even from current market price, and if your time horizon is very large, then no problem, you can adventure buying this falling knife. Or else what I would advocate in this market to general retail public will be to start buying large caps which are relatively performing well. Avoid mid and small cap unless you understand the company and the promoter very well. Look at stocks like, for example, HDFC Bank, Bharti Airtel, or look at even stocks like ITC. On large caps, you have a lot more better companies. And even if you ask me on mid cap, I want to buy larger mid caps where results were very good. For example, look at Indian Hotel. Results were very good. Stock is available now at good price. Even in fact, Bajaj Finance, even after the move, what you have seen from 7,000 to 8,500 in this month, I feel Bajaj Finance is still a good stock to buy if you want to make a portfolio. I will avoid buying stocks which are down 50-60%, and you can't buy them because they are down 50-60% from the top. You have to buy them because of their intrinsic value and the visibility of earnings what you have. So my simple suggestion will be, right now look at large caps, let the market make the reversal, let the turn come, let more money start flowing into the market, then venture into good mid cap and small cap, or else this is not the time to definitely catch the falling knife.
Catch the falling knife, definitely. But Mr. Tandon, the fact that investors always want to be risky, and the fact that the way how the broader markets have moved in the last 4 to 5 years, I think people have just so gotten used to catching the falling knife, not realizing that what it could be, and that could actually bruise you at one point in time. I want to understand, are you finding any value in the broader market names, especially those who have corrected like 50-60% from the top?
Well, the broad market is a very large market, and there could always be some companies which may appear to be cheap. But with that caveat, I would argue that by and large, whenever liquidity dries up, the small cap companies actually start to tank quite badly in terms of market, simply because they are largely illiquid. What I find surprising also is that over a period of years, I have observed that the earnings seems to follow the stock market, especially for companies where corporate governance numbers, corporate governance levels are leaving something to be desired. So it wouldn't be surprising to find that companies, as they start losing market cap, also start reporting worse numbers. And that is the down cycle that creates a problem for smaller companies, especially those which are relatively unknown. Now, this is not a generalization, and as I said, there will always be good quality small companies. After all, that's how you grow into large companies. But broadly, I agree with the gentleman who was just before me in saying that, look, whenever the market turns, it's the frontline companies that will do well. There is clear visibility, for example, in Bharti, why the numbers should do well. The capex is behind them. The cash flows will start to come in. So you have a free cash flow, which is going to grow. It's now a duopoly market, more or less. And the ability of these companies to keep on raising prices is unquestioned. So, for example, you will be getting them at a better and better cash flow yield. Why would you want to experiment, especially in a market where it's fairly highly uncertain as to where the earnings growth can come from, when you have some company which is already well known, well researched, and where it is clear that the free cash flow numbers will keep improving?
All right, that's the take coming in on the broader market. So every time there are some stock-specific opportunities when it comes to the broader market space, but definitely talking about the markets what we have seen is that at least in the short term, a lot of our experts are definitely flagging off. The bottom is in place. Let's see that what actually holds for the upcoming week, but definitely a lot of these stocks are in focus. And today what we are seeing is that select IT names are trying to make a comeback. It's been a mild recovery from the day's lowest point. Stocks like TCS, HCL Tech, even Infosys are holding on to the gains of 0.5 to 1%, at least that's what we can spot on the green side at least. But talking about the markets then, Indian equities have been under pressure amid all the kinds of uncertainty, and we might be looking at some relief with a short-term rally. But will that rally lead to Dalal Street to higher levels? We try to find an answer from CLSA's Vikas Kumar Jain. So let's go across and listen into his take.
There could be a rally, but the extent of the rally is something where valuation comes into the picture automatically, because if from where we are right now, it is going to be tough to imagine that going to be a 20-30% rally. However, can there be a very quick 5-7-8% rally which allows sentiment to go to neutral or to bullish a little bit, and then we could have another correction? Absolutely. I mean, that's something which, in fact, if you were to gun to my head, if I have to choose one, I would say maybe a rally, but not really going to all-time highs, and then maybe more range bound or corrective action.
Right, that's the view coming in from Vikas Kumar Jain from CLSA to talk about the markets and where he thinks the market is headed from here on. But talking about the markets today, very good steady recovery that we've seen from the day's lowest point. No doubt we are like 14% down on the benchmark indices. You have the broader markets that's fallen more, but that recovery is actually steady when you talk about the markets. Take a look at like some of the stocks that have just come out with their earnings, or the fact that they're moving. You have Radico Khaitan that is actually seeing a downtick, because you have a lot of communications around the fact that the government is cutting tax on imported bourbon whiskey, and that sort of has actually had a very negative impact on Radico Khaitan. And not just Radico Khaitan, maybe we can just bring up some other counters that could be in focus. I'm not very clear or sure if they are also a part of the bourbon whiskey category, and that could have an impact. Maybe we can just pull up the charts of United Spirits for a second and just see how that one is reacting in trade today. Yes, that one is down about 2.3%, as well as Global Spirit is the other one. United Breweries has other concerns of it, given the fact that the Telangana price is not as hike is not as much as they are expected. But let's take a look at what Global Spirit is doing. Tilaknagar Industries, yes, but Radico Khaitan is the one that is seeing the maximum hit on that particular news development. You also have Samvardhana Motherson, erstwhile Motherson Sumi, that is also reacting to his numbers. Short while ago came out with his numbers as well. So a lot of news specific action actually in today's trading session, Shrishti, given the fact that we are actually at the fag end of the earnings season. I'm sure you're going to heave a sigh of relief given the fact the earnings season is now coming to the end.
Well, certainly, Cheryl, the earnings season is now coming to the end.
Don't come to an end.
Absolutely. Absolutely. But definitely looking out for the next week. Let's see that whether markets show some bit of a recovery or not, because it's been quite a tough week for the market participants.
Not tough week, it's been tough 1 month because there have been like a series of events that we've been watching out for. Yeah. First, you spoke about the Trump admin taking over. Then you had the Federal Reserve and the outcome from that particular front. Then you had the budget. Then you had the RBI meet outcome. Then you had this big event that we've all been watching out for, right? The head of the states actually meeting. So it looks like all of that will settle down, and the biggest factor of all of being for the domestic market being earnings. So I think all of that settles down, the dust settles down. So let's see how the next 2 to 3 weeks pans out. It'll be a little lull period because you'll not have too many earnings to watch out for.
Well, certainly, and but let's stick to the markets then, and let's also try tracking some of the stocks and also try tracking some of the ideas from our experts. And let's in technologies. It's been a while that we have spoken about or touched upon this particular counter, one of those high beta names, and definitely have participated in this fall. But now it's coming in on the sell radar for Naresh. But on the flip side, ITC, that still stands out for him. But Rudra, what about you?
See, I am picking again two relatively very strong stocks. Number one, buy on Bajaj Finance. This stock, even after making that big move from 7,000 to that 8,400, 500 zone, made some amount of retracement of this big profit. And we saw some profit booking. Now Bajaj Finance is again relatively very, very strong. And in this market recovery, this stock is definitely participating on the upside. So buy Bajaj Finance, keep a target of 8,500 with a stop loss of 8,370. And for me, even HDFC Bank looks relatively strong. In fact, all private banks are looking relatively stronger. Matter of choice, whether you want to pick HDFC, ICICI, Kotak Bank, one of these can be great buy. I have picked HDFC Bank. Look at targets of 1,730 with a stop loss of 1,690.
All right. So for Naresh, it's been a buy and a sell call. For Rudra, it's been 2 buy calls. But Naresh, of the last few trading sessions, I've noticed you've given a buy and a sell call.
So this is the time where you want to be defensive or rather trading much lesser size, given that there is no clear trend. We've seen the difference in terms of divergence. You have Nifty holding on to 22,800, but the small cap and the mid cap indices and a bigger part of the broader market making new 52-week lows. And because we've corrected almost 30-40% in a lot of stocks, there are not a lot of sell trades. And the recoveries are also not strong. So we saw that recovery from 22,800 to 23,800 on the Nifty. But we didn't see a sharp recovery on stocks. So this is a time where you want to wait out, let the consolidation play. And once there is a much stronger trend, trade more.
Right, so that's the defensive strategy that Naresh is playing with, one buy, but do try to manage some of the trades with a hedge, with a sell call at least. But Mr. Tandon, what's been your take on the auto space? Because it's been not that a bad earning season for the auto counters, and some of the companies that have actually missed the street estimates, they were punished quite significantly. Any segment that stands out to you? Because when we were talking to some of these commercial vehicle leaders, they were actually flagging off and they are hopeful for a strong quarter in the times ahead, while the passenger vehicle demands remain subdued. But two-wheeler companies are also not coming out with a very negative commentary. So any stock or rather any segment would you like at this point in time?
Well, clearly from the passenger vehicle space, the only area that is doing well is the SUVs. And Mahindra has taken the lead there and has continued to maintain its lead, though there are others which are threatening to roll out models which can take away some of that. So far, we haven't seen evidence of the market preferring any of the non-Mahindra models in any significant way, which will erode their market share. So the rest of the market really in the more premium side continues to remain fairly narrow. And the latest budget may actually help the lower priced cars, but we have yet to see evidence of that. It will take a while for that to play through. Two-wheelers, I am not very bullish. I think competition remains very strong. There are more and more models coming in. The EV market is going to pick up there. And more importantly, there are new players in the field which will try and shake out the existing players. And as a consequence, I think the fight is still there, good for consumers, not so great for the manufacturers. On the LCVs, etc., as you said, there is expectation that if you really expect the construction cycle to revive, especially on the capex with the government spending more in the new financial year, then you may actually get some more demand. In the LCV, so far, it has not been particularly exciting. It's kind of tepid. While some of the construction equipment companies have done reasonably better, but broadly, there isn't much, to be talking about. The larger players which are in the international markets like Tata Motors, well, there is complete mayhem in the international markets. If you look at any of the international manufacturers, you will see both US and China are in the doldrums, and those are the two largest markets that are there. Besides the new EV players, especially the Chinese companies have kind of shaken out the larger, the more established EV manufacturers. So we are seeing a shakeout there. Broadly, I think this market remains somewhat difficult to play. As I said, valuations are stretched for companies like Mahindra, but they have the best portfolio overall.
All right, so that's the view coming in from Mr. Tandon on the entire auto space, given the fact that this week we are ending, and I think hopefully this week marks the end of a lot of news flow actually surrounding the markets. No doubt you have the pharma sector that has been at the forefront of this entire discussion, as well as the consumption space, as well as the banking space. Consumption space, given the fact that for the last 15 days, we've only been talking how the budget could impact the consumption spend, how you will have a shift now come the next financial year to consumption, and especially the consumption discretionary space. Then you had the RBI meet outcome where you had the cut in the interest rates and where everybody started now tilting towards the interest rate sensitives. And yes, that's one of the sectors that we need to watch out for. And a lot of analysts, a lot of a lot of experts have been touting the fact that it could be the banks that could lead from the fund to going ahead. Apart from that, now this week we've been only talking about the pharma sector because a lot of news flow surrounding to the fact that the pharma sector would be one of them that could get likely exceptions or exemptions from the tariffs coming in from the Trump administration. That's not how it's panned out because we've not got it in black and white at this point in time. And that's one of the reasons why you've seen the pharma sector actually see a sharp slide this week, 5.5% coming in. And it is a major contributor to our exports into the United States. That is the pharma sector. And that's one of the reasons why you're seeing that sort of a result in most of the pharma names. But on that note, thank you so much, Naresh, Rudra, as well as Mr. Tandon for joining us on the show to take us through what one should watch out for when you talk about the markets and the way ahead. But Shrishti, yes, this week has been a week, a lot of news flows, and it's very heartening to see that yesterday we did see a sharp up move in the markets. We did cool off from those levels, but today is the opposite. We are trying to actually claw back from the day's lowest point, 0.4% downtick coming in for Nifty. Not too perturbed about it, given the fact that we are holding on to that range.
Well, certainly, Cheryl, it's been not a great day for the markets. At least it's a sea of red. But let's call it a day, and let's call it a week as well as we moving closer to ending this day. Let's go across to we will get to Snehi, who will be joining us for the wrap of the market. But looking at the markets and the index, it's been not a great day and even not a great week rather, because this particular week we have seen a lot of the volatile moves. Wednesday was a decent day. Then comes Thursday, it was a volatile day. On an intraday basis, we have seen such wild swings, and Friday Friday itself, though the start was really good. Do you remember GIFT Nifty was actually up around 100 odd points, and we were just talking that there has been a softer stance by Donald Trump on the tariff impositions. Nothing major has come in. The market should be able to absorb this, but doesn't seem like so, and the concerns still persist. We will watch out for the FIDI numbers as well, but let's go across to Snehi, who is joining us with the closing lap.
Absolutely, we can say that we've seen some sort of recovery coming in on the Nifty 50 today, because we had slipped below the 22,850 levels, to be precise. 820, 830 thereabouts is where we had reached for the lowest point of the trading day. From that point, it's been a recovery of somewhere around 120, 130 points coming in on the Nifty. But well, yes, we were well above the 23,100 mark. So quite a bit of a drop coming in over there, but not all that bad. A 0.5% cut coming in on the Nifty. It's still in the red nonetheless. Sensex, however, has fared better, and the sharper recovery has been seen on the Sensex towards the day's close. A 0.3% cut almost coming in on the Sensex today. If you take a look at Nifty Bank, that is also seeing deeper cuts coming in. 0.5% cut coming in on Nifty Bank, and struggling to hold on above this 49,100 levels is where the Nifty Bank is. So steep cuts coming in on that index today. Advanced decline ratio very steeply in the favor of the declines today. And on that note, let's also take a look at what the India VIX was up to in today's trading session, because we did see a little bit of a spike up coming in India VIX in the first half of the trading day, but that seems to have eased down a little bit. We were above the 15.2 mark. We're in the 15 thereabouts area right now. 0.6% coming in on the India VIX today. Let's take a look at what the broader markets were up to in today's trading session, because it was the broader end of the market that was taking it on the chin today. Nifty mid cap trading with cuts of 2.5%. Nifty small cap was the real loser in today's trade, because at one point it was lower by 3.5%. In fact, it was building onto those gains, and it's inching towards a 4% close coming in by the end point of today's trading session. So not looking good for the small cap pack at all. Let's take a look at some sectoral gainers and losers. No gainers as such, because you have IT that was dilly-dallying between the red and the green. But let's just pull up Nifty IT. Continues to be in the red, slightly under pressure. 1/10 of a cut coming in on Nifty IT. However, the biggest loser today, Nifty Media, followed by Nifty Pharma. Nifty Pharma continues to lose again. Nifty Energy, PSU Bank, Metal, Realty, Auto, Bank and FMCG. Lastly, IT, your most least losers in today's trading session. The likes of Aurobindo Pharma, even though positive news flow had come in for its arm in the morning today. Lupin, Biocon, Divi's Lab, Sun Pharma, Dr. Reddy is trading anywhere between 2.5% and 4% cuts coming in today's trading session. So not looking good for the pharma pack at all in today's trade. A couple of stocks that were big losers in today's trading session, the likes of Deepak Nitrite on the back of poor set of numbers, Manappuram Finance poor set of numbers and weak brokerage notes coming in. Hindalco also mixed set, but rather tepid brokerage notes coming in. So all of those stocks were in focus. Deepak Nitrite's going home with cuts of 15.5% today. But that's what the market has summed up to be like in today's trading session. Let's pull up the Nifty. Nifty trading with cuts of 0.6%. Below the 23,000 mark for sure is where we've ended, but even below 22,900 is how we've ended for this week and the day.